Good evening and welcome back to the latest edition of the InvestTalk market analysis for the week ending August 23rd, 2024. Getting this video a little late on this Saturday, but I'm coming to you nonetheless. And I will always start off with the economic data. And what's most important is bank credit, right? I've said this before that, if banks continue to lend, that is good for the economy. That's what happened in '08, right? If you zoom back out, what happened here in '08? Banks stopped lending. So they had shrinkage just recently last year, and that has rebounded. So, that continues to edge higher, and that means more liquidity in the system, and things generally will trend positively. So that is a number one, and that is looking good. Now, the unemployment claims did come in on Thursday. It wasn't really a busy week, to be honest with you. Economic data, your weekly unemployment claims ticked up a little bit. Continuing claims ticked up a little bit. Everyone thought we were breaking out here on continuous claims, but it's trending higher, but nothing too extreme. Existing and new home sales did tick up on the drop in mortgage rates. Existing homes up 1.28% month over month, and new homes up 10% month over month. But the big news was Jackson Hole, and Jerome Powell basically said that there will be a rate cut in September. They are ready. The markets, in the little unwinding of the yen carry trade earlier this month, the market started a pricing 50 basis point cut, and ultimately that is being priced out of the market, and we're getting much closer to that 25 basis point cut, which makes sense. Okay, so we'll see how that goes, but that's really what is driving the market right now. And I'm titling this video "Central Bank Easing Sparks Bullish Bets," and that's really what's happening now. If you look at the dollar, I've said this before. Once again, a weak dollar is good for asset prices. Remember, it's the denominator. Okay, when you're looking at stock prices, and so when the dollar goes down, other asset prices tend to go up, including gold. Right, gold continues to march higher, and this is I don't want to say canary in the coal mine, but basically, money continues to flow out of treasuries in general, and more entities across the world, east and west, are pouring more money into more reserves into gold, and that's why you see this demand continuing to head higher. So, still remain very bullish on the precious metal space overall. The move index, I want to highlight that that is headed higher, so that could create an issue if the market thinks the Fed isn't easing fast enough. So something I will continue to watch. The growth to value trade, however, we had a little bounce back in the month of in August so far. But a little rollover near the end of the week. And that's once again on the weaker dollar. The weaker dollar is beneficial for the value side of the market, for places like financials. Financials did very well, hitting a new 52-week high there. You go into things like the material space. Obviously, that's getting a nice rebound here. Energy still remains relatively muted, but a nice day on Friday. I still think there's some more upside there, especially with geopolitical tensions. You look at industrials. Industrials, another classic value side of the market, and that is hitting a 52-week high as well. Before I continue, I kind of want to get to this. Let's refresh it. So this is the Russell 3000 based on sector and 1 month performance. And you can see while the S&P and all these other values of the market, they're hitting new 52-week highs, what's happening with a lot of those mega caps? Google down nearly 5%, Microsoft down over 5%. Remember, this is over the last month. Qualcomm down 8, Honeywell down 6, Tesla down 2.25, Chevron down 4.5, Amazon down 3. Only Apple and Nvidia, the big names, and Meta are really holding up there. So, and Berkshire and JP Morgan, they're doing well. Why? Because they're financials. So you can kind of see, outside of Bank of America and Wells Fargo, the financials are doing fairly well. Coinbase also not doing very well. That's in the red. And you're getting health care stocks doing pretty well. What else? Non-durables, right? Procter & Gamble, Coke, Pepsi, Philip Morris. What is this one? Nike. all doing fairly well over the past month. So something to take note of, and these new trends. And I want to get to this ratio, which would be the IWM to the Qs. So the Russell 2000 to the Nasdaq, which you can see here. This is a big reversal, and you're starting to see I think the beginning of an uptrend. Small caps do better when the cost of capital is lower. Here's the 10-year. Okay, the 10-year Treasury. Let me go to this chart. I'll go here. There we go. The 10-year is now down to 3.8%. And the Fed going through an easing cycle, that is good for small caps. And so if small caps can continue to gain traction and the Nasdaq continues to kind of flounder, you're going to see this rotation of markets continue. And remember, it's not just the Fed that is easing. The Fed, the central banks around the world are easing. Okay. So overall, that is a very good thing for just asset prices in general. Okay, look at something like IYR, REITs just crushing, doing very, very well. And so this is a time that you have to position your portfolio accordingly. And those harder assets, the value side of the market, is coming back in a big, big way. Utilities as well, those remain very strong. It's just really, look at XLK. Not making new highs. Let's go to the SMH. Nvidia's doing okay, but the rest of the sector not so much. And so this rotation of markets is definitely something you must take note of and incorporate into your strategy overall. So that pretty much does it. I mean, it's pretty simple here. I'm bullish asset prices in general through year end, and mainly the small caps, mid caps, value side of the market, mainly due to the weaker dollar and the lower cost of capital. Remember, the lower interest rates really helps those smaller companies that tend to have worse balance sheets and gives them opportunity to extend out their debt at more reasonable rates. And so I really think that this is a trend you're going to see continue to emerge as we head into the election season and into year end. So that's where we're at. I appreciate you all tuning in and liking and subscribing to this channel. And a reminder, the contents of this video are for educational purposes only and should not be construed as a recommendation to buy or sell security or to participate in investment strategy. The views are my own, do not represent those of KP Financial and those associated. Have a wonderful weekend.